It's a challenging time for public companies, and Bitcoin offers them a lifeline. There's a gap in the marketplace of fixed income products that fit within their framework and their investment mandate, and also are 100% powered by Bitcoin. That was a signal to the rest of Wall Street that Bitcoin is here to stay. The whole thesis behind blockchain technology, not Bitcoin, has been a complete dead end. Not only do you have Larry Fink on national television saying that Bitcoin's bigger than any government, but now you have the US government itself providing the stamp of approval with the executive order on the strategic Bitcoin reserve. What I find really appealing about starting the Bitcoin bond company is being able to have a seat at those tables with very smart people in the fixed income world to orange pill them, to talk about Bitcoin and to help them figure out a way to get it into their portfolios. They don't understand the level of institutional adoption it has achieved today. Today, it's a lot more about helping people catch up to where we're at, whereas 10 years ago, it's about painting a picture of where we will be.
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey, Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. In the studio, as always, with my co-founder, co-host, CEO of Acropolis, Chase Palmieri, and we are joined by the one and only Pierre Rochard this week. Pierre has had many titles in Bitcoin at several companies, so we're not going to list all of them, but he's currently the CEO of the Bitcoin Bond Company and is the newly appointed host of the Bitcoin for Corporations show. Super excited to dig into your new company, your new show, and Bitcoin Treasuries. So welcome to the show, Pierre.
Hey, thanks for having me on, Mason and Chase. Excited to be here.
So I mentioned it. Congrats on the new show, and really excited to dig into the new business as well. But how did the first episode of the Bitcoin for Corporations podcast go? And what's the overall goal of the show?
Yeah, I think it went well. Just wanted to provide kind of an overview of why is it that a corporation would be interested in Bitcoin to begin with. I think that's kind of the foundational question. And getting into some of the challenges that modern publicly traded companies have on the growth side and on their return on assets. And also the challenge on the liability side, which is that the Fed has been raising interest rates. So the cost of capital has been increasing as well. And that if we look at the overall equity markets, that those magnificent seven are kind of taking the oxygen out of the room and absorbing a lot of equity investor interest. And so it's, I think, a challenging time for public companies, and Bitcoin offers them a lifeline for many different reasons. But a lot of the reasons, I think that the core reasons are really the same ones as for individuals, right? Which is that Bitcoin has this finite scarcity of there's only going to be 21 million Bitcoin. So if we start from there and then look at, of course, it's permissionless. It's a global monetary system. It transacts 24/7. And that all of this is underpinned by a decentralized software architecture. And so those reasons are the same for individuals. They're the same for corporations, and they're the same for governments, frankly. So that was episode one. Episode two, I just recorded with David Bailey, who's launching Nakamoto, a new Bitcoin Treasury company. So we got into his thesis and his views on the different aspects of the Bitcoin Treasury play. And so I think that went really well. Lots of alpha dropped in there. So definitely encourage people to hit the subscribe button after they're done listening to all of the Acropolis episodes and they're looking for more content.
Love it. Yeah, thanks. We'll be looking out for that episode, hearing about Nakamoto's kind of Bitcoin Treasury squared approach. Excited to learn more about that. When we look at company CEOs, whether public or private, and how they think about the hurdle rate of, like you said, that internal rate of investment or return on assets, return on equity, et cetera. There's a lot of different hurdle rates that have existed. You could think about, the coupon on a money market fund. You can think about the growth of the S&P 500. I guess, how would you quantify the opportunity cost of business leaders not holding Bitcoin in their corporate treasury? Is there a metric that you would use to actually quantify that opportunity cost?
Yeah, that's a great question. So, to your point, I think historically the hurdle rate has been between, at worst 0%, right? If we look at times in Japan, times here in the U.S. where interest rates are there, and that causes all sorts of malinvestment. Now, let's say the U.S. interest rates are more like 4.5. And then if we look at equity markets, depending on who you ask, it's going to be between 8 and 16% as the hurdle rate for that. And then if you go into tech, they'll use 20% as a high growth metric. And then when we look at Bitcoin, so it depends on what time frame we're looking at of historically what's the compounded annual growth rate, which really I think that the nice part about that metric and the bad part about it is that it strips out a lot of the volatility. So if you look at like the 5-year CAGR, you might say that, okay, today we should be between 50 and 20%, and that you have some dips. So for example, the 2017 to 22 December number in particular, you're basically 0% because you're taking the top of that bull market and then you're comparing it to the bottom of the FTX 17K round trip. So it really depends what time frame you're looking at, but if you average it out, you're north of 20%. I think that the days of 100% are behind us, so you're probably looking at between 20 and 80%, which really speaks to Bitcoin's volatility. And you can split the difference and say, okay, 40, 50% should be the hurdle rate, which is really hard for a lot of projects out there. If you're comparing the opportunity cost of holding Bitcoin versus investing in an operating business, that number is a very high hurdle rate. And I think that the takeaway is that in all likelihood, you should be buying Bitcoin instead of making that investment. And that might be a tough pill to swallow for operators because they like putting money to work, and it's exciting to like get your hands dirty and be building in the real world. So I sympathize with that, and they also can have some comfort of thinking about income generating assets with a cash flow and seeing all those metrics and employing others. I get it. But at the end of the day, to be good stewards of capital, we have to look at it objectively and say, Bitcoin is performing very well. And so that does create a high bar for everything else.
Absolutely. Strategy's Bitcoin Treasury has been a benchmark for corporations trying to follow their lead. What lessons from their approach can smaller or mid-sized companies that don't have access to the 0% borrowing rates that they have, what can they apply to their own Bitcoin Treasury policies on a smaller scale?
Yeah, so I would push back on characterizing Saylor's convertible debt as 0% because it's really that instead of paying a cash interest rate, he's putting in an embedded call option on his stock, right? So that conversion rate, ultimately, there is a cost to that capital, and it's just smart to not have it be a cash cost because the play here is to never sell the Bitcoin, and so and also that Bitcoin being very volatile, it turns a disadvantage into an advantage because of the volatility premium on the call option. So for a small and medium-sized business, the way they could approach this is really that they could develop an option strategy around their Bitcoin position to try to mimic or find ways to monetize the position that is akin to what Sailor's doing. But it'll never really be the same because their equity is not publicly traded and they're not tying the performance of the convertible debt to their equity. So I think that what they have to end up looking at is, are there opportunities in the credit markets to be able to enter into credit transactions with lenders so that the lender is really lending against the operating business, and the borrower is then, instead of reinvesting into the operating business, is putting it into Bitcoin. And so if the company as an entity is currently under leveraged and has that kind of capacity to take on leverage, that they could take that approach, right, of buying Bitcoin and borrowing against the operating company. And frankly, the other approach is to sell the business, right? If the business is in a sector where there's lots of private equity activity, doing roll-ups and consolidations, that creates an opportunity to exit the equity and sell the equity and to buy Bitcoin and perhaps to stay on as an operator and to continue to draw salary. That might not appeal to those who are really independent minded and, they enjoy the fact that they control the business and they want to run it their way. But you got to be clear eyed about what the opportunities are with regards to, turning the business into Bitcoin.
Actually, you kind of led me to a question that I wasn't planning on asking, but it's something that I think about a lot, which is the M&A activity around companies that are holding Bitcoin treasuries. Initially, I thought, this will make these types of companies an appealing acquisition target for larger entities that basically get to scoop up an operating business with cash flow, and they get to kind of de-risk it by adding the Bitcoin from that company's treasury onto their own treasury. But at the same time, I find it hard to think that a company that's sitting on a Bitcoin treasury is going to sell its business at a multiple that is appealing to the acquirer, because they almost feel like, hey, if I need to shut down the operating business and just sit on the Bitcoin for another cycle, and I can continue to own the majority share of this business, I almost wonder if companies that own Bitcoin treasuries are going to be less willing to be acquired. Do you have any thoughts about M&A activity around Bitcoin treasury companies in the future?
Yeah, so for the publicly traded ones, I think that what I could foresee happening would be really that the operations side gets acquired, right, or is spun off, and that they become a pure play that only holds Bitcoin and only engages in treasury operations and the financial engineering on the other side of the balance sheet. That way, they just have 100% of the focus of the board and the executive team on the Bitcoin opportunity, and that the operating company, the operations really end up being a distraction, and so they want to divest of those. That's something that I could foresee happening in some cases where they don't need the cash flow from the operations in order to meet criteria for example, getting a convertible bond, right? And it really, at some point, the balance sheet just has enough capital on it that rating agencies and lenders are willing to just underwrite that risk without having the cash flows of an operating company.
Okay, yeah, that makes sense. And obviously, as the corporate Bitcoin adoption interest grows, which I think we would all expect to see over the next 12 to 18 months, there is a limited amount of actual Bitcoiners with deep finance expertise. And so, all these companies that want to move towards a Bitcoin treasury strategy and embrace kind of the unique properties of holding spot Bitcoin and running the accumulation or accretive finance strategies, there's just a scarcity in the same way that there is with Bitcoin, the commodity itself, with actual Bitcoiners with this finance background. So how do you see the corporate adoption scaling? And we deal with this every day, so don't answer based on what you think we want to hear. We're interested in hearing your thoughts here. But do you think that these roles within organizations are going to be outsourced? Do you think it's going to be things like what Metaplanet did and brings on Dylan LeClaire in-house? Or do you think it's going to be massive retraining of the existing finance teams? How does this scale?
I'd say probably all of the above, right? That history is the best guide to the future on that, and that I think that it can that the talent issue can cut both ways and can go wrong both ways. One is if you have somebody with deep financial expertise, but is kind of not fully orange pilled, not Bitcoin native, that then when they're looking at the asset side of the balance sheet, they kind of get led astray by other opportunities that end up not really having the one-to-one gearing with spot BTC. And so they try to be a little bit too clever perhaps on the asset side, and that slips things up. Conversely, if you have somebody who might be Bitcoin native, they're very strong on Bitcoin, but they're not keen on the finance side, they can trip things up on the finance side of over leveraging the balance sheet and causing forced liquidation, or not getting the risk parameters in place, because at the end of the day, Bitcoin is very volatile, or just not identifying the opportunities in the capital markets that are being underutilized, and so they end up, increasing the cost of capital for the company in a way that's disadvantageous relative to other Bitcoin treasury companies, and then they end up, through that lack of execution, it's kind of a compoundingly higher cost of capital, because then the equity investors, they're going to steer towards others who are, using their capital more efficiently, and so then the equity becomes more expensive. So I think that the lack of expertise can cut both ways. You need to have somebody or a team that has coverage across, and also has the conviction on Bitcoin where they don't get shaken, right? And so with Bitcoin's volatility, you can see people kind of wobble, lose confidence, and retrench and become risk averse, when really, it's kind of a pro-cyclical move of like becoming risk averse in bear markets and then becoming too risk seeking in the bull markets and overextending themselves. So I think it takes conviction combined with discipline and kind of the financial acumen to really make the magic work.
So switching gears a bit, what exactly is the opportunity that the Bitcoin bond company is going after?
Yeah, so for the Bitcoin bond company, what we're really focused on is on the credit side of things, right? So the current Bitcoin treasury companies are basically equity vehicles. And so even if we look at the convertible bonds, at the end of the day, it's for the most part, it's not long-only bondholders. It is really arbitrage traders who are shorting the stock and going long the bond at the same time. And so on the credit side, there's really not been any kind of vehicles for credit investors to have exposure to Bitcoin. So they don't have the same kinds of wrappers of an IBIT or MSTR or any other kinds on ticker symbols that you might have on the equity side. Sailor, I think, is trying to crack into that with Strife and Strike. It's a very preferred equity is an unfamiliar vehicle in the fixed income world, and so he's having to educate both on Bitcoin and also on preferred stock and perpetual preferreds. And so I think that in terms of educating fixed income investors on the opportunity for Bitcoin, there's a gap in the marketplace of fixed income products that fit within their framework and their investment mandate, and also are 100% powered by Bitcoin, right? So there's no corporate risk or counterparty risk beyond what they're used to in the institutional context. So that's it in a nutshell.
It's interesting, despite the massive, 300 trillion plus bond market as a total addressable market for a startup to be going after, we've historically seen very few bond companies startups. So I'm curious if you think that that's because many folks just think that traditional bonds have worked, maybe until recently, or is it something about Bitcoin's performance and its ability to be infused into this space that creates the opportunity. Why have we not seen more innovation in the bond arena until lately?
I think it's really two factors. One is the SEC. So until last year, the SEC wouldn't even approve ETFs, and they had to be sued in court to push that through. The first ETF proposal was 2013, the Winklevi twins. And so it really was a decade in the desert from a securitization perspective that the SEC would just not have approved any kind of fixed income wrappers around Bitcoin. They wouldn't approve equity wrappers around Bitcoin. So, in some ways, MSTR and the Bitcoin miners were kind of workarounds of the SEC's, not being merit neutral and picking winners and losers. Now, today, with Chairman Paul Atkins, it's 180 degrees the opposite, right? So as long as everything's properly disclosed, the SEC will not get in the way of any kind of innovative products that come out that are powered by Bitcoin. Two is really on the institutional appetite. So it was, I think, a real big moment from an institutional perspective when BlackRock's ETF came out and was not just successful, but more successful than any other ETF in the history of the products. And so that was a signal to the rest of Wall Street that, look, Bitcoin is here to stay. The whole thesis behind blockchain technology, not Bitcoin, has been a complete dead end. And so all of that learning has to be unlearned. Even with the success of BlackRock's ETP, it's not like that Titanic, or that's a bad metaphor, that cruise ship can be turned very quickly, but it is turning. And so the institutional world is starting to learn about Bitcoin and change their perspective on it in a way that would just not have been possible a year ago. On top of the fact that not only do you have Larry Fink on national television saying that Bitcoin's bigger than any government, but now you have the U.S. government itself providing a somewhat of a stamp of approval with the executive order on the strategic Bitcoin reserve and all these bills passing at the state level that are catalysts for folks who are looking to not rock the boat, right? There's the very real career risk of saying, hey, I think Bitcoin's a good idea. If you're a portfolio manager at an institutional credit fund, you want to be very careful about, oddball ideas. And it's less and less of an oddball idea and more of an emerging asset class that they want to participate in. And so I think that that's really what has changed. And so if we look at the next 1 to 5 years, that there's going to be just more and more activity on the fixed income side that is powered by Bitcoin in all sorts of different ways.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin Treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, and a creative financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days. The listeners of our show are comprised of both founders and CEOs considering a Bitcoin treasury strategy, and I would say hardcore Bitcoiners. So needless to say, a very curious audience. So I would love to pose the question, if you could share a bit more about the investment vehicles themselves. Where does the fixed income come from? Where does the yield come from?
Yeah, absolutely. So the yield comes from the capital appreciation of Bitcoin as an asset. And so it's really about tranching up the risk return of spot Bitcoin and cold storage. Because anytime that you try to add any yield on top of that, then the complexity and the counterparty risk starts increasing. And so it's really about providing a very clean vehicle for one, a credit wrapper around Bitcoin, and two, within that, having risk transfer using subordination, not using any other kind of derivatives or other kinds of financial products on top of that. So now, granted, if a credit fund is interested in a Bitcoin-backed note, and they also want to hedge it or amplify it in some way, they can layer on, CME futures or options on IBIT and have a derivatives overlay on top of the credit instrument. That's fairly common in the credit world that they would do that in any kind of context. But fundamentally, if we look at Bitcoin, comparing it to other assets, you have to adapt the credit wrapper to the asset itself, right? So Bitcoin natively does not just generate a yield on its own. The way to think about it is that all of the value creation of Bitcoin gets reinvested into the Bitcoin principal, right? And so imagine you have a growth stock that, instead of paying a dividend and generating a yield for the equity investors in that way, it just increases in value over time. And so it's about the capital appreciation. And so then if you're thinking about it from a fixed income perspective, well, how do you participate in that? You have to find ways to convert the capital gains into a yield by selling a portion of it, right? And then figuring out, okay, how do we structure it so that we're not, essentially picking the fruit before it has matured, but really, looking at the cash flows and trying to figure out how to toggle between generating cash and letting the value compound within the vehicle.
Is the Bitcoin bond company going to be agnostic to whether it works with private, public, or even government institutions? And when should we expect to see these products becoming available?
Yeah, so it's definitely it's all about on the private side, right? So
Correct.
by the nature of it, these retail investors are generally not interested in fixed income products, and there's a whole wide world of institutional investors who are only interested in fixed income products, and so that's where the focus is, and so that's by the nature of the product, yeah.
Okay, cool. So maybe last question on the Bitcoin bond company here is the timing of the new show with BFC maybe leads people like us to believe that maybe Bitcoin Magazine, David Bailey, UTXO are involved in the project. Are you able to speak to, whether or not they're involved somehow?
No, not at all. I'm just the host of the show,
Okay.
and really just interested in on all fronts on Bitcoin education, right? So part of what I find really appealing about starting the Bitcoin bond company is being able to have a seat at those tables with very smart people in the fixed income world to orange pill them, to talk about Bitcoin, and to help them figure out a way to get it into their portfolios. Likewise, with the Bitcoin for Corporations show, it's all about having conversations with folks in the corporate world who are on their Bitcoin journey and sharing that with others who might be earlier or further ahead, just depending on the context. But look, I think that on either side, we're just very early in terms of Bitcoin adoption. And so within the Bitcoin echo chamber, sometimes it feels like all the gains are behind us and everybody's already orange pilled and everybody's already in the Bitcoin world. Once you break out of that echo chamber and you start talking with people, whether it's at bond investors or with corporate management teams, Bitcoin's still very foreign to them, right? And so they might even capitalize the C and have a space between bit and coin, right? So it's still, I think that from an education perspective, we are still very early. And if we want to see capital flow into Bitcoin, we just have to meet that challenge where it's at and build bridges.
If you were to compare the adoption of Bitcoin to the adoption of the internet, what year are we at?
Oh, wow. Yeah, I don't know because I didn't I kind of grew up taking the internet for granted. I don't even know when the internet started. But the point I would put out, it would be that if we look at it from a balance sheet perspective, Bitcoin's at less than 1% adoption. And then if we look at it from a name recognition perspective, like more than 95% of people have heard the word Bitcoin before. And there's just a massive gap between those two figures. And the only way to bring them closer together is through Bitcoin education, like this show, and y'all are doing a killer job on that. And to really explain what the value proposition is for Bitcoin, why it's not tulips and beanie babies, and why it's going to continue to grow from here.
Great answer. Are bit bonds your favorite government neutral strategy for helping the US strategic Bitcoin reserve acquire more Bitcoin?
They are. They are because ultimately what it offers is a way to not just accumulate Bitcoin, but also drive down the interest costs for the US government, right? So right now we're paying out more than $1 trillion in cash in interest, which is greater than the Department of Defense budget. So I think that the bit bonds proposal, and Andrew Hans had a great presentation in DC about it. Highly recommend folks to watch that. Excellent approach to it. And it would also, selfishly, for my purposes, really help accelerate conversations and expand the Overton window of credit investors saying, okay, well, we're comfortable with sovereign grade credit being enhanced with Bitcoin. Let's also look at 100% Bitcoin credit, with what the Bitcoin bond company is doing. And so it would really accelerate education if we had the backing of the US Treasury in this space. The other proposal that I think makes a lot of sense is just selling all the gold and buying Bitcoin with the proceeds, because at the end of the day, like, gold is supposed to be used, right? It has utility. And the best utility for it is as jewelry, as the decorative aspect of it, but also to use it in electronics and industrial processes, dentistry. It shouldn't be locked up in Fort Knox collecting dust. And so that's where I think that we have to move away from storing value in things that have utility, because then that just prices out people actually using the asset. And move our wealth into an asset like Bitcoin that does not have any intrinsic utility, right? People say that as a knock on Bitcoin, but it's actually one of the best properties of Bitcoin is that it doesn't have intrinsic utility. Let's stop monetizing assets that are useful. Otherwise, we end up in situations where the next generation of Americans can't afford to buy a house because people are using houses as a store of value instead of using it as the intrinsic utility of a home, right? For raising a family, it's not supposed to be a savings account, and so that's the other proposal that I think makes a lot of sense.
Yeah, those people should be counting their lucky stars that we're not monetizing food, water, and housing, and that something like Bitcoin exists to capture that monetary premium into the future.
Yeah, and now we're hearing about. I saw a story about this financing company that's going to provide credit for buying burritos, and it's like,
Yep.
this is a terrible approach to what assets to monetize. And so it just speaks to late stage fiat, and we need to start building bridges in the other direction.
And with the gold in Fort Knox collecting dust, we need to hope that it's in there collecting dust. It's not verifiable.
Yeah, that's a big open question. So it's interesting because, I was knocking gold's auditability, but we also have not really heard about the audit on the Bitcoin that are being held by the government. And so I think that in either case, fixing the situation with the Bitcoin and auditing the Bitcoin, I think, is a lot easier than fixing the situation with the gold. Because, melting down all of that gold to verify that it has the correct fineness, that's a Herculean task. So we'll see how many years it takes to actually get that accomplished. I think that the best way to do it is just sell all of it and sell it at a discount, and kind of just buyer beware. You get what you get. or sell it at a premium by melting down the gold and making jewelry out of it, especially with the 250th anniversary of the United States next year. I think it's a great opportunity to create a patriotic line of jewelry that you can brag about oh, this is gold from Fort Knox, and at the same time know that you're getting or whatever carat gold that you are buying.
Do you think it's safe to say that if the audit of the Bitcoin ends up revealing that the Biden administration had actually liquidated those 200,000 or so coins, that would be bullish for price, because it would mean that, price survived where it's at despite all that selling, and that for the government, the current administration, to reach maybe Senator Loomis's 1 million Bitcoin position, that they're going to have to buy an additional 200,000 coins now? Is that bullish, or do you think we'd see a drop on that news?
Yeah, that's a great question. I think that what would really, what would be really necessary would be an investigation, because that would reveal a very huge lack of judgment and fiduciary duty for whoever was involved, especially if they didn't disclose it. Right? It's one thing if you sell the Bitcoin and you publicize that you sold the Bitcoin, but if you sell the Bitcoin secretly, in the last days of the administration, it's like, Hitler in his bunker or something type situation. Terrible situation. So I think that the price impact, who knows, right? Like maybe there'd be no impact just because there's not really a cash flow there. But the price impact, when they start accumulating and actually, we start seeing the flows, that obviously will be bullish. So that's something to look out for over the coming years.
Do you think the U.S. government will pull any levers to bring interest rates down before they have to refinance the $9 trillion within the next year? And if so, how do you think they're going to try to do it?
It seems like they have already started trying to do it, but I'm very skeptical that there's a lot of progress to be made there. Despite the heroic efforts of Elon Musk and Doge, it doesn't seem like currently there's a trajectory to balancing the budget and, even getting into a surplus to try to, shore up the fiscal situation. And then on the monetary side, I think that they're maybe calling it mission accomplished too early on getting inflation down. And that if they start cutting now, that inflation could come roaring back. And also that the situation with the banking system is pretty dicey, where essentially the banks are sitting on a combination of bad loans, but also of positions that have gone the other way, where they might have invested in a security when the rates were at 2% or 3%, and now they're sitting on book losses as rates went up. So I think that the banking system might be more fragile than they're letting on to. So all that to say that right now is a very sensitive time for the financial system and for the U.S. government. So hopefully they'll be able to thread that needle. We've got some really talented people at the U.S. Treasury and at the Federal Reserve. But if they don't figure it out, I think that it's great that we have Plan B with Bitcoin.
Yeah, you mentioned how, if anything, it seems like the next direction for rates would be coming down. Maybe, like you said, kind of overly, acknowledging victory over inflation and bringing rates down, especially ahead of having to refinance this $9 trillion. What I find really interesting is with STRF, MicroStrategy or Strategy's perpetual fixed income product that is, upwards of 10% annual distribution. Every bit that the Treasury rates come down makes their product that much more appealing. I wonder if this is the moment where Saylor overstepped and started to, whether it's happened already or going to happen as a result of this, starting to step on the government's toes in a way that gets him noticed in a bad way. Do you see something like STRF, especially as rates come down, starting to compete with U.S. Treasury bills, also because the U.S. is $37 trillion in debt? And MicroStrategy is backed by the world's largest digital asset collateral balance sheet. So, like, at what point does something like STRF start to compete directly with U.S. bonds?
I mean, I don't see it because there's a lot of bonds that compete with U.S. Treasuries. I mean, if you look at just the whole world of investment grade credit, there's already plenty of competition. And even if you look at credit spreads, it's not like they are that wide today. I would argue that if we're looking at what Strife competes with today, and Sailor's pointed this out as well, Strife is completely mispriced, right? So today, you could make a very solid argument for STRF is, I think it's trading at like 98 cents on the dollar. And so, implying an even higher interest rate than the face value. Arguably, and this is not financial advice, one could say that it should be trading at a premium relative to $100 because it's so over collateralized. And that it's really, if you look at those yields, right, of let's say 10 to 11%, who is it competing with today? Which doesn't make any sense, but it's junk bonds, right? It's just like it's competing with credit instruments that are really marginal in terms of their quality or of their duration, and they're not even close to competing with a money market fund or with U.S. Treasuries or investment grade bonds, right? So like if you look at investment grade credit, that might be like at 6%, right? And so and 5%. And now Moody's just lowered the credit rating for the US, but I think that was just political. But point being that there is a massive set of fixed income instruments that are much closer to Strife, and thus, if we're thinking about a substitution effect, are much closer to that. Now, add on top of that how far away we are from even that. Because if you look at the latest ATM offerings, it's been, I think, I'm speaking off the top of my head here. I think it's been like 90% MSTR, 10% STRK. And so he's not even really moving a lot of STRF product into the market because I think that he just doesn't see it as priced correctly, and also does not have sufficient liquidity to be issuing from the shelf. So I think your theory it's interesting and amusing, but I think it's very far from reality because it's not close to being there yet. And to the point earlier, fixed income portfolio managers generally don't go into preferred shares. So I think that it makes a lot more sense for equity retail investors who, and also institutional equity investors who can look at Strife and say, this compared to other pieces of my equity portfolio that are more defensive, right? So here's where I think Strife is really competing against. It's not even fixed income. It's the income products like utilities, right, that are paying a dividend, that are generating electricity, right, or that are cash cows, right, that are very defensive positions in an equity portfolio, but are contributing to the overall diversification of that portfolio and providing a solid base that they're building on top of more aggressive growth opportunities. So you could have an institutional equity portfolio manager who has all three, Strife, Strike, and MSTR, as having exposure across the capital structure for strategy. That's just part of their overall portfolio, right? It's not like 100% of their equity portfolio, but they expect that Strife will get repriced at better rates, and that before it does, it's providing a really nice defensive yield that's comparable, or that is far outperforming the utilities in their portfolio, or a healthcare company or hospital, right, that is just not, Magnificent Seven high growth, and it's really about the income opportunity and the stability of that part of the capital structure. When does that get onto the radar of the U.S. government? I think we got a long ways to go. So I think that, by the time the alarm bells are ringing at the Treasury and at, the Financial Stability Oversight Board Committee, FSOC, whatever it is, that, today's market cap is like $2 trillion. I think $20 trillion, probably still not ringing alarm bells. That's just gold, right? And everybody's happy about the wealth effect on Wall Street. $200 trillion, yeah, you could have Jeremy Powell, putting together a press conference and, trying to talk down the Bitcoin market and, global regulators kind of panicking, and Trump's, position would probably be a little more victorious rather than panicking. But I think that ultimately what has to happen in order for there to continue to be financial stability is to have a strategic Bitcoin reserve. That's really the only way for the government to defend itself and to get ahead of the curve. So hopefully that happens sooner rather than later.
Yeah, and you're obviously one of the OG Bitcoin maxis, and for those of us who've been following Bitcoin for a long time, there's always been a lot of talk about how Bitcoin would directly compete with the dollar, gold, stocks, real estate, even bonds. But I think a lot of us, perhaps, maybe just speaking for myself, failed to predict how Bitcoin would infuse into these other assets to maybe give them a second life and not ultimately become a binary competitor where, an investor has to decide to allocate either to Bitcoin or to a bond, but instead to something like a bit bond. I'm curious, did this infusion surprise you, or did you maybe see this as how it was going to always play out?
Well, look, my animus towards any kind of financial instrument has always been that it's not backed by Bitcoin, and so if we look at, okay, why are mortgage-backed securities underperforming? It's really because of the collateral, right? And that real estate is constantly depreciating, it's falling apart. It's arguably overvalued because it's subsidized by the government and all of this. You've got property taxes on it, and so it's just constantly, that's so. Then if we look at all of what is backing these financial instruments, the problem isn't the financial instrument itself; it's what is the asset behind it. And so I think that's really the key difference. Now, when we look at the phases of Bitcoin adoption, I think that it has to start with the fact that Bitcoin starts with the most risk-seeking individuals, right? Those who have the least to lose. And so that's why I think that when you look at the demographics of the online communities that, were really sprung up around Bitcoin and bought Bitcoin, that you have folks who, are younger, more tech savvy, and willing to underwrite that risk, and that eventually it moves onto the risk curve, right? So then you eventually get to those who are more risk averse, more conservative, and then eventually you get to those who are just completely unwilling to take on any risk, right? And so for those, they have to have something around it that is absorbing that risk for them. And that's where, like, if we think about the dollar being backed by Bitcoin, it's running the gold playbook in reverse, right? Where it started out with silver is backing the dollar, and then they swapped it out to gold is backing the dollar, and then they changed the ratio, and then they removed the backing entirely, and then you had free floating dollar. And so how do we run that in reverse so that it's really about minimizing the disruption, right? Because if if my prediction, so in 2013, I thought, okay, well, here's what's going to happen is that all of those instruments are going to collapse to zero, and spot Bitcoin as a commodity is going to go to the moon and wipe everyone else out. That would have caused obviously societal chaos and have hurt people who really had no business getting hurt, right? So the teacher that's retiring, why should she have her retirement taken away from her because she happened to live through hyper Bitcoinization? It doesn't make any sense at all. And so what makes a lot more sense is to say, okay, well, that pension fund that is financing her retirement, they need to buy Bitcoin. How do they buy Bitcoin? In whatever format makes sense for them. So if they don't have a mandate to buy a commodity, then they need to buy an equity. They need to buy a credit instrument. As long as it's backed and powered by Bitcoin and it's going to deliver the risk return of Bitcoin, then they're going to ultimately be able to fulfill their mandate towards the end user of the pension. So I think that it would have been really catastrophic if the youthful predictions of Bitcoin monetizing and not bringing everyone along with it had been fulfilled. And there was even I remember there was like a Reddit post that was like this guy making a apocalyptic prediction of, hey, look, Bitcoin's gonna take over and it's gonna leave everyone behind, and all of the early adopters are going to be in their citadels, fending off hordes of zombies that are destitute. Just completely dystopian stuff. And the opposite is happening, where instead of having a small percentage of society that's winning, it's really about bringing everyone on board and having as many people winning alongside Bitcoin as possible.
So we're going to end the show off on some fun questions. Before we get to those final fun ones, we have one more from a listener of the show. He's a Bitcoin friend of ours, Wyatt O'Rourke. He wants to ask you what the strategy is to get the bonds rated, and if that's a big hurdle or important for institutional investors. He wants to know if his target market cares about ratings and what the process is like. So if you could opine on that just a bit for Wyatt.
Yeah, so every credit fund has a sleeve for unrated securities because there's always opportunities among unrated securities. There's lots of different reasons for why a security might be unrated. One would be that it's an emerging asset class. And so, for a fund manager, it can be a source of alpha. Long term, the rating agencies are going to have to wrap their minds around Bitcoin's valuation, right? So if they stay stuck on a mindset of, it's just tulips and beanie babies and there's no fundamentals, and so there's no intrinsic value, and so Bitcoin could go to zero tomorrow, there's no way they could ever assign a rating to anything, right? That's Bitcoin powered. And that presents a problem for everybody in the ecosystem because ratings are very important for portfolio managers. Now, the best portfolio managers, they take the ratings as advisory and they form their own view on what the rating should be. And so I think that it's not a showstopper, but in terms of thinking about long-term adoption, the rating agencies, if they don't get on board, then what we'll see is that we'll see the emergence of new rating agencies, right? So you'll have like pure breed, okay, we just do Bitcoin-related credit ratings, and that's what the market uses. That's what the market pays us for. And then Moody's and S&P just lose out on that business, right? And they just make a decision that's ideological instead of thinking about what's best for their business. And that's a totally plausible outcome, and that could be what happens. I think it's more likely that the rating agencies will catch up to the market and realize that if Strife is like, let's say Strife is 20% LTV. They're not today, not even close, right? So this is just a purely hypothetical. And let's say hypothetically they're trading at like 8% interest rate, then you'd have to map on to the credit rating of, okay, well, this is triple B, right? And like take what the market is telling you and back into a rating from the market price That might be an approach of like doing comparables that way. But really, what I would encourage the rating agencies to do is look at it quantitatively. So look at Bitcoin's historical volatility, the trends on that, and build a model around that. Maybe don't choose like Giovanni's power model or S2F. Just come up with your own special sauce, or come up with some kind of hybrid, right? Of like, here are all the different models that exist today. Here's ours. It kind of synthesizes across from a quantitative perspective, just to provide risk metrics on that level. And then also to have a qualitative aspect of Bitcoin's this decentralized network. There's no single point of failure. Objectively, it's the most reliable monetary system in the world. If you look at it of like from a fundamentals perspective, that it should have a higher credit rating than any sovereign out there, because it just has fewer risks to it than any sovereign and than any corporate for that matter. So I think that they're going to have to. I would argue they have to come up with something that's better than AAA for Bitcoin, that's the challenge I would pose to them long term. Yeah, to Wyatt's question, I think that we're extremely early today, right? So there's a massive amount of work and education that has to happen for us to make any progress here. And that's what I'm excited about with the Bitcoin Bond Company, is that it actually represents an opportunity to do something challenging rather than something easy.
All right. Well, thanks, Wyatt. I really appreciate the question because that was a super interesting answer. But now on to the fun ones. So how would you orange pill someone today compared to when you first got into Bitcoin over a decade ago?
Well, I think that today we have a lot more social proof, right? So now we can name drop Larry Fink. A decade ago, you couldn't. A decade ago, I think that it was much more about trying to buy into the vision of what Bitcoin will become. Today, it's about helping them catch up to the reality of where Bitcoin is at today. And so, there's people out there, they don't even know Bitcoin's a $2 trillion asset, right? Like they have no concept of what the depth of liquidity is in the marketplace. They don't understand the level of institutional adoption it has achieved today. So today it's a lot more about helping people catch up to where we're at. Whereas 10 years ago, it's about, painting a picture of where we will be.
And obviously, this couldn't be mandated, but I'm curious where you're at on the Bitcoin versus Sats debate. It seems to pop up every 8 months or so for one reason or another. And some believe it should be something that the community comes together on and decides. Others believe that it'll be naturally occurring, that once we're into the millions of coins, we're going to almost have to refer to Sats and it'll become natural. It'll emerge more naturally. Any thoughts on the Sats versus whole coin debate?
My one of my uncles, I was on a call with him and he was like, hey Pierre, I heard that crypto is over $100,000 now. And I thought to myself, like, so we're just going to call Bitcoin crypto now? It's like, we have zero control over the language. Okay. So I think the language policing is a little ridiculous, but my point being that, yeah, it's obviously it's an emergent thing. And also throughout Bitcoin's history, I've always heard of like proposals of like, Andreas Antonopoulos, he wanted to rename Bitcoin TrustNet, right? So like everybody has ideas about, oh, I don't like the word Bitcoin for this or that reason. It sounds too physical. It overemphasizes the monetary aspect of it, or it doesn't communicate the decentralization aspect. Like everybody's got their quibbles with every name in this space. Sats sounds horrible, and then a few years later you're like used to it, and you're thinking Sats the standard. I've seen lots of different proposals about how to do the 0.00004 BTC, like visually showing it to make it easier to do smaller amounts, even if we keep whole Bitcoin. I think that it's great that it's acrimonious and it's balkanized and it's decentralized. And I think that the risk is that what you don't want to have is like people developing Bitcoin derangement syndrome over things that are ultimately not material. So like, if somebody is like trying to push a name change in Bitcoin, and then Bitcoiners are mean to them, and then they're like, "Oh, I give up on Bitcoin because this community is not, focused on marketing." It's like, man, you completely missed the forest for the trees on that, and so I think there's always a risk of like people uh, not understanding what is negotiable and what is non-negotiable. So to me, anything literally superficial, like the name of it, to me that's entirely negotiable. I don't care, whatever it's in common usage. If when my uncle called Bitcoin crypto, I didn't like correct him and say no, it's Bitcoin crypto. It's not crypto. Stop using the word crypto. It's like, just let's roll with it and let's meet people where they're at.
Yes, Uncle Rochard, crypto
Yeah.
is indeed over 100,000. Right now it's 106,295 US dollars. So on the upswing during this pod, we should record more.
Yeah.
But last one here, and we can fully edit this out if you don't want to answer the question. So know that going into it. But we've been seeing you going back and forth with Brad Garlinghouse and want to give you the opportunity to speak to him directly. And please don't hold back, because you can say whatever you'd like on New Foundations.
Look, I mean, I think that on one hand, Brad will say that he holds Bitcoin and that he doesn't have anything against Bitcoin, and he just wants everyone to win. On the other hand, he won't accept that Bitcoin has won, right? And so it's very hard for him to accept that Bitcoin's king, and that if we're going to set up a strategic reserve, Bitcoin is a different kind of asset than XRP, and we can't lump them together. And so I think that he needs to accept reality, right, which is what it is, and that XRP is a corporate currency that is promoted by Ripple, and they can continue doing that. Obviously, I don't think that it should be illegal or anything, but that Bitcoin is, digital gold, and it's a commodity, and that it's decentralized currency, and something that will obviously continue to outpace XRP for fundamental monetary economic reasons, and that over the long arc of history, XRP is going to continue to be demonetized and is going to trend towards zero in Sats terms. And so, the idea that XRP is going to flip in Bitcoin or anything like that is frankly absurd. And so he also, I think, is very misleading with his retail investor community, where he's always trying to play it both ways of, hey, if you buy XRP, you're investing in Ripple. And also XRP is not a security and you're not investing in Ripple. And so I think that it's very misleading what he's done with the XRP community. And, I've talked with a lot of the XRP army on X. They're very vulnerable people in terms of, let's face it, their emotional and IQ level. Like, he's clearly exploiting these people that are on the left side of the curve, to put it politely. And so it's not good. I think that the free market will sort it out. In the meantime, he should not really be in a position to complain when others see what he's doing for what it is and don't want to meet with him. For example, if a U.S. senator says, like, actually, I know that we had a meeting scheduled, but I'd rather not meet with you because all you're going to do is, one, not really have any interesting policy ideas beyond wanting the U.S. government to buy XRP, which doesn't make any sense. And two, that you're just going to use the photo op as a way to make it seem like the government is endorsing your token when it's not, and that you're going to, just post it on social media and promote XRP using it, and it's not really for any valid public policy reason. So, that's about sums it up.
Very well said, Pierre. We're at the end of the show, but I just want to tell you personally, we very much appreciate your time and everything that you've done for Bitcoin. The passion and thoroughness in which you speak about it and teach people and work in it and, dedicate your life to it is something that we're all very grateful for. So thank you for that. Want to give the audience, if they don't know you, a place to follow you and see your work. So go ahead and feel free to plug whatever you'd like to plug.
Yeah, find me on X at Bitcoin Pierre, and on LinkedIn, Pierre Rochard. Just make sure it's not an impersonator in either case. But DMs are open, and I'm never gonna, ask you for Bitcoin in DMs. Okay, that's always going to be a scammer. And so make sure you're DMing the right person. And looking forward to connecting.
Absolutely. Thanks for coming on the show.
Thanks,
Thank
Pierre.
you.
Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.